Is the next bubble cycle going to be 4 years long like this one? In all likelihood, the one after this is my best guess. When we approach 2030, I fear we will have gone a little too far. While I suppose it might also be this cycle. Furthermore, we may be able to avoid a major technological regression in the event. Use of restricted liquidity. Okay, so what if? Our market will be in a sideways to down 20% bear phase for 1 year before finally taking off. Assuming that to be true, it will skyrocket to new heights of success. Given the current rate of advancement in AI and other technologies, it is inevitable that investment capital will be drawn in from all corners of the globe. The transparency and ease of use of Bitcoin Zella make it stand out. Our experience is designed to be accessible to all. No matter how much or how little experience you have with cryptocurrency, guess who is keeping tabs on us? Robert Kiyosaki, author of the popular book Rich Dad, Poor Dad. On top of that, it's free, and we'd like to use this time to thank everyone who has put their faith in us. You may get all the fresh information for free if you subscribe now. Rather from merely following trends, strive to be the first. Experience the cutting edge by subscribing to Bitcoin Zella today. In the video that was released today, a discussion of Raoul Pal's exponential age thesis is presented. The reasons behind the resurgence of liquidity in the second half of 2024, the death of diversification as a tool of financial repression, the fourth turning, and the effects of these developments on the markets will be thoroughly examined by Raoul. The business cycle and the liquidity cycle have taken center stage, I see. No one wants it to be simple either. It shouldn't be that simple, according to them. Because it gives the impression that people are intelligent, they adore complexity. Despite their disapproval, the simplicity seemed to be working wonderfully. You should ideally be on the left side of the bell curve, where the numbers increase, according to that whole meme. On the flip side, you'll see an increase in the corresponding numbers as a result of your familiarity with the various mechanisms, present, seated, and ready to go. Why are we all going to fight each other? Why does printing more money not cause more liquidity to enter the system? For what reason isn't that accomplished by the plumbing? Every single item we receive, but the quantity increases. And I simply feel it to be an incredibly potent force that people are afraid to believe because it challenges their worldview. For the simple reason that many people take pleasure in witnessing a stock market meltdown, it's as strange as this. As an asset class, cryptocurrencies is currently worth $2.5 trillion. If I extrapolate the growth rates of cryptocurrencies relative to the internet using Bitcoin's log regression channel and assume a significant slowdown from here, it reaches $100 trillion by around 2032. Suddenly, we start babbling about figures like $100 trillion. At a cost of $100 trillion, we are generating $97.5 trillion in additional wealth. To my knowledge, that is the fastest and most massive accumulation of riches that the human race has ever witnessed. When you consider that the S&P 500 index has a market worth of $50 trillion, a result of value accumulation by U.S. corporations and the economy over the past century. Wow, that's twice as much. It's completely new to us. This is a once-in-a-lifetime chance situation. What percentage of the 100 trillion will be dominated by Bitcoin? No, because Bitcoin's monetary value and wealth storage capabilities aren't the only uses for the blockchain infrastructure. In order to reach 100 trillion, we must use it for the entire finance system, Web 2.0, companies and everything else. What would Bitcoin be worth if the world were 100 trillion? Perhaps 20 trillion, it might be 15 trillion, whatever that figure is. Therefore, the expansion will be felt over the entire area. After falling to a 5-month low the day before, Bitcoin recovered 6.4% the next day, reaching $56,975. It appears that traders are starting to get over the negative impact of Midgox's $8 billion BTC refund and the recent BTC sell-offs caused by the governments of Germany and the US, as seen by this comeback. Crypto industry heavyweights have been trying to minimize the damage that Midgox and the BTC sell-offs caused by the US and German governments did to Bitcoin's optimistic long-term prospects. One of these individuals is CryptoQuant's creator and CEO Kai-Young Ju. Ju brought to the attention of traders the fact that governments held a meager 8 billion Bitcoins, or just 4% of the $225 billion that has entered the Bitcoin market since 2023. That is to say, there is more than enough money in the Bitcoin market to weather government-led BTC sell-offs. This is particularly true in light of speculation that The German government may soon sell off its remaining 42,000 BTC in Bitcoin holdings as of July 6th. The present Bitcoin market sell-off, according to independent market expert trader Tardigrade, is similar to previous black swan events that triggered strong rallies and long bull cycles. $BTC followed the similar trajectory in 2016, 2020, and 2024, he pointed out. Below the trend line, $BTC. Fakeout was observed, in addition to 2020. A bull run occurs once prices recover and rise above the trend line. The present decline in Bitcoin value, according to Rec Capital's analysis, is just one phase of the normal market reaction to a Bitcoin-related event. In this pattern that occurs after a halving, the market adjusts to the new supply dynamics, which can cause Bitcoin's price to fall significantly for a few months. Once the market reacts to the reduced supply, though, prices tend to recover and even go into a strong upward trend as a result of the combined effects of increased demand and less supply. The Nasdaq is down 99.97% when I split it by Bitcoin. What on earth is the purpose? The strongest Nasdaq was simply yours. Strangely, if everything was interconnected and propelled by the same forces, the logical conclusion would be that crypto is the only asset you need to hold. The next step is to determine which cryptocurrency is doing better. You may create charts comparing anything to Bitcoin and anything to Ethereum. It was Sol. If anything seems to be a breakout against those, my new assignment is to compare everything to Solana. Yeah, still, Solana is no little undertaking. Solana is large enough with large enough network adoption effects for me to say that's fine. If it's a small thing, maybe with one of the memes, I'll have a small position, but I won't put my life savings into it. Following the lead of the US stock market rise, Bitcoin had a dramatic recovery today, reaching a new record high. After the holidays, trading was light, but the SP 500 nevertheless managed to hit its 34th record high for the year. The stock market recovered from its recent turbulence in response to reports of a slowdown in hiring in the United States and the highest unemployment rate since 2021. Bets on Wall Street are now indicating a 72% likelihood of a rate decrease in September, up from 55.4% a month ago due to the dismal jobs report. When the opportunity cost of holding lower-yielding US Treasury notes decreases, the market price of Bitcoin and other risky assets tends to rise. On July 5th, when the U.S. jobs data was posted, for example, the Bitcoin Exchange Traded Funds ETF saw an influx of $143.1 million into its account. These ETFs suffered 2 days of straight outflows earlier this week. A significant increase in Bitcoin's funding rates on the futures market has occurred alongside the cryptocurrency's price rebound, even though there has been a marked decrease in open interest OI over that time. A net positive funding rate of 0.178% per week was recorded for Bitcoin futures as of July 6th, up from 0.044% per week 2 days prior. At the same time, the OI, which represents the overall amount of unfinished contracts, decreased to approximately $28 billion from $31.64 billion over that time, and are prepared to pay a premium to secure their long-term investments. Bitcoin's lower OI and higher financing rates suggest that more confident traders and institutions are keeping or expanding their exposure, hoping for a price increase. Weak hands are now selling off their stakes. It goes without saying that you should subscribe to Bitcoin Seller, get the day's top stories sent to your inbox at no cost whatsoever. Why you haven't subscribed yet is a mystery to me. Please hit the like button and spread the word if you enjoyed the video. Approve it and sign up for daily updates by clicking the button. You are not alone on this path to financial independence. We are here to provide you the tools you need. Until our paths cross again, may you be joyful investors.